Which is the right time to stop your SIP investment, and how should a SIP investor handle market fluctuation? Financial expert Mr. Ramalingam will explain this now.
If you are stopping your SIP at the very wrong time, then the main purpose of SIP itself will not be met. So when there is an emergency requirement, you are doing your SIP from your regular monthly income, monthly cash flow. Suppose if there is something else has come up that has eaten your monthly cash flow, there is an emergency, somebody is hospitalized, you have a job loss, and you are going for a higher education, you are upskilling yourself by doing a course or attending a training program, doing a certification, then obviously you have to stop your SIP. Then rebalance your portfolio. Say you have SIP running in your equity portfolio, you have SIP running in your debt portfolio. Equity has overgrown, like a situation between 2020 April to 2021 October. There was a continuous bull run and market touched 62,000 levels, kind of market overheated at that point in time. So instead of continuing your SIP in equity that point in time, increasing your debt SIP makes sense. You have to rebalance because your asset allocation is tilted high towards equity. So in order to rebalance, you can stop SIP in equity and start SIP in debt. You can do the vice versa also if the market crashes. When you want to switch a fund, say a fund which was not performing for 3 years and you are doing an SIP there, then you can restart your SIP somewhere else. Also, you have a goal for 10 years. Say you have a kid's education at the end of 10th year, you are starting your SIP today. Then on 7th year, now that long-term goal has become a short-term goal, it is no more advisable to invest more money for that goal, which is you have to meet 3 years from now, to invest in equity. So you are stopping your equity investment, you are continuing or rediverting that SIP amount into a debt SIP. Only for long-term equity works. If you have got short-term, then better to do SIP in debt investment. So that way, in these cases, it is acceptable, justifiable to invest in SIP and stop SIP at the appropriate time. However, because of market crash, because there is uncertainty in the market, there is a short-term fluctuation in the market, there is a loss in your portfolio, in a SIP folio, don't stop your SIP. In fact, that is the time to continue your SIP. The main purpose of SIP itself is whenever the market is going down, when you continue your SIP, you will get more and more units because NAV is available at a discounted rate. When you are investing the same amount, now you will be getting more units because last month the price was higher. You got X amount of units. Now the price has come down by 10%. The NAV market has fallen by 10%. Now you will be getting X plus 10% of units. That is the advantage. When the market is going down, you'll be getting more and more units for the same SIP installment amount. When the market goes up, all the units which you have got during this kind of market fall at discounted rate will give you above average returns. That is the idea of doing SIP. So don't stop SIP at extremely wrong time when the market is fluctuating. So when a fund is consistently underperforming, when you are closer to your goal, when you want to change your asset allocation, when a mutual fund scheme is changing its investment objective, right? Then it is not in alignment with your goals, then you can change it. Then obviously emergency situation also you can change.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.